Welcome to Buy, Hold, Sell. My name is Vishal Tekshanani, and in this episode, we're going to ask ourselves the important question: is it time to take Bitcoin seriously in the same way we should have perhaps taken technology stocks a bit more seriously back in the 2010s? To challenge our thinking, I'm joined by Charlie Viola from Viola Private Wealth and Adam Dawes from Shaw and Partners. Will they warn us to steer clear of crypto and explore better alternatives? Or is this an asset class that you finally want at least a wee bit of a satellite position in? Adam, I will kick off with you, and Charlie, welcome. Does crypto as an asset class belong in an investor's portfolio? Yay or nay? Why or why not?
Yes, I think it does. It is in its infancy stage. Even though Bitcoin's been around 10 years or so, it's been around a long time. I still think that it is part of an investment case. We're seeing a lot of larger fund managers, institutional buying coming in, and certainly there's been a lot of disasters. Mt. Gox, the Trump meme coin, are classic examples of how there's a lot of pump and dump in this sector. So I think you've got to be a little bit careful, but cold storage wallets are probably the way to go. In other words, getting your Bitcoin out of the system, keeping it safe is probably one way to do it. But yes, it is an asset class that it should be considered for most clients' portfolios.
Okay, well, Adam's clearly a fan. Charlie, are you? Same question to you.
No, not really. I'll be honest with you. So typically we've got big clients and we sort of say to clients, look, if you want a piece of it, make sure it's a very small part of your big portfolio, but it's certainly not somewhere we would specifically allocate to. The lack of regulation, the level of volatility there, the fact that we don't really know what the drivers are in terms of what's driving the price up or down, apart from sentiment or Elon coming out and saying something or Trump creating something. And then the fact that really what we've probably seen over the last number of years, it's no hedge. It just simply seems to correlate to financial markets anyway. So we don't love it. We'll do it if people want it, but we're certainly not building brand new portfolios and placing an allocation in there unless they specifically want it.
Okay, so Charlie, you'll execute the trades for clients, but let me, I'm not trying to be a salesman here, but I'm gonna look at recent events, okay? Donald Trump wants to make US the crypto capital of the world. Larry Fink, heard he got a new job. He's crypto's new chief marketing officer. You have ETF providers in Australia like VanEck, Monochrome, BetaShares. They've all put their name behind this. What would it take to convince you to say, hey, in Viola Private Wealth, we want a bit of a strategic asset allocation here? What would convince you?
Yeah, I think probably just more robust regulatory constraints around it is probably the answer. And then to Adam's point, a safer way of actually buying it. So we actually don't mind a couple of the ETFs that have come out, especially the Monochrome one, where you're getting actual exposure to the underlying Bitcoin. The tracking error to the Bitcoin price is very, very low. I think it's 0.004 or something off the actual Bitcoin. So, if we were going to do it, we'd do it through that type of vehicle, but we want to see greater regulation. And we kind of want to understand a little bit better the actual underlying use case. It's fine all these guys coming out and kind of going, hey, we now want to pump it because we want to put our own money in it, we want to see it go up. But like I said, it still just correlates to financial markets. You made the point in your intro, it's like, should we have taken it more seriously the way that we took tech companies more seriously? Tech companies were doing something. They were creating clients, they were building subscriptions, they were generating earnings, and the good ones survived and did really well. Where are we at that with Bitcoin? There's no actual earnings being generated.
Okay, fair point. Now, Adam, Bitcoin does do something. It goes up. It goes down a lot, then it goes up. What convinced you to have positions in Bitcoin? And mind if I ask, what is your asset allocation within portfolios to digital assets?
I think the original question was, is it an asset class? And I think it is a growing asset class. Whether we allocate to it, I'm with Charlie, we very much allow the clients to say, this is what we want. We don't allocate a huge amount to it. Like gold, I've got 5% weight in most clients' portfolios in gold. Bitcoin would be a lot less than that, and we allocate that because of the volatility that is inherent in this. When Donald Trump came in, Bitcoin was over $100,000. My wife turned around and said, we better get some Bitcoin. I went out to clients and we sold some Bitcoin on the back of that, because basically, if a taxi driver's telling you, your wife's telling you to do it, it's probably reached maximum capacity there. So it is a very volatile asset class, and I think you've got to be really prepared to ride out those waves if you are investing in those kinds of things.
Okay, so let's talk about your preferred method to invest in crypto. How are you doing it?
Yeah, so there's a couple of ETFs, or one BTXX is one of those ones that I like. The Van Eck one as well, VBTC, I think it is. Both of those are really good ones. They do track the Bitcoin price, and there's little tracking error on that, because I think that's important that you need to have that. And then certainly there are other asset classes, all of the data centers you can look at for Bitcoin, because that is where a lot of that money is going to as well. So something like a NextDC Goodman Group is a really great way to play that Bitcoin space while not really playing the Bitcoin space, if that makes sense.
Okay, that makes sense. Charlie, you mentioned monochrome. Are there alternative ways you prefer playing digital assets?
Yeah. Adam stole my notes because I literally was going to say.
Mate, you just think the same. You just think the same.
We didn't agree at the start. Now we're agreeing. I like it. It's fine.
We like the data set. We do like the data center play. We like so Goodman Group, NextDC. I literally had written them on this sheet of paper. If anyone doesn't believe me, so we agree. We think that there's enough momentum in some of those ancillary or services style arrangements. If we are going to buy Bitcoin, again, we're probably the same. We like the ones that really either track it closely or actually buy the underlying Bitcoin. IBTC from Monochrome is probably the one that we've been utilising for clients. And we probably, like lots of people, have probably invested in a couple of the miners over the last sort of 4 or 5 years. Iron, Mara, and a couple of the others, to meet success, but heaps of volatility. So to Adam's point before, if you're going to get on this roller coaster, like you've got to hang on kind of thing.
Okay. Now, one of the problems we have, especially among the Livewire reader bases, and I think we touched on this, was you can't value it, you can't smell it, you can't touch it. So Charlie, for investors who are hesitant about crypto, or they simply don't have the risk profile, what alternatives do you prefer? Is there one or two you can suggest, and why?
Yeah, I think it's probably back to Adam's point in terms of making sure you're sort of buying some of those companies that will naturally be exposed to the sector without actually being exposed to it directly and get benefit from it. So if you do end up with digital currencies sort of going to the moon, those companies are going to benefit from that. So, and those heavily investing in data centers like Goodman Group and NextDC and what have you are good examples of that.
Okay, but is there any other asset classes you prefer outside of digital assets, things like private credit and what have you?
Certainly private debt, private credit, private equity, all of those other what we probably consider more normal asset classes is absolutely where clients should be investing their money and where people should be investing their money to generate returns. So, we believe we're a big one for asset quality and we're a big one for diversity. So we just don't think that when you're building brand new portfolios that crypto or digital currency has its own sleeve just yet, unless somebody specifically wants it.
Okay, and is there any preferred ETF or exposure you have for something like private credit?
In private credit, we like QRI, the Qualitas Real Estate Income Fund. We like GCI. We like MXT. There's a number in that space, and I think those really quite mature spaces around private credit, private debt, where the managers, know the pools of loans are good quality, low LVR, non-construction, or the kind of credit or the asset-backed credit stuff is really good quality. I think those are all quite mature. The CEOs within those organisations are very experienced. I do think the risk in credit has certainly gone up. We all have to remember that there's somebody on the other side who has to pay for this stuff. Yep. So I think choose your pool of capital wisely and understand what you're investing in. But that's actually quite a mature market now, and I think that there are good investment returns that can still be had in all of those kind of very normal vehicles.
Adam, same question to you. Outside of digital assets, are there any preferred alternatives that you like, and what are some ways to play them?
So yeah, private credit is definitely one of those ways to play it. There's no doubt about it. That has the ability and has grown since the banks basically have stopped lending to this mid-tier section of the market, and that's why it's grown so much I'm a little bit worried there is a bit of a bubble inside the private credit side of things, because there's so many of these businesses that are coming out of the woodwork now because of what's happening in the hybrid market, as well as then what the banks aren't allowing to lend as well. And so there is this level of risk that does go up when you are investing in these kinds of things. MXT, one of the sort of biggest in there, that's probably okay. MA1, that's a new one that just came out, and there's a Dominion one as well that just came out as well. So there's going to be more and more of these businesses coming out because of, one, the hybrid market. $35 billion needs to find a home somewhere over the next 5 to 7 years, and this is where potentially it's going to gravitate to. So just be a little bit careful in that space.
We're certainly a big believer in private markets. I mean, in our business, we probably allocate 40 to 45% of our monies to private markets. We've stopped using the word alternatives.
Within the alternatives bucket, right?
Well, we've kind of stopped using the word alternatives, because you say alternatives and people
So
think
broad.
people think you're going to tip their money into a Guatemalan gold mine or something, right? And you're not. They're just all very normal assets, maybe sort of wrapped up with sometimes in a liquidity premium to them. But we're a big believer in clients having exposure to private debt, private credit, real assets. We're a big one for real assets. We like infrastructure. We like the fact that there is something that you can touch and feel and smell and see, and it generates revenue through the cycle. So I think investors need to be invested across all of those types of assets, and then financial markets on top of that. And financial markets have done lots of the heavy lifting, but I would suggest that over the next 10 or 15 years, these private markets will generate better returns.
Okay, big fan of private markets. Final word to you.
Yeah, look, I think so. I mean, I'm more in the listed space, but look, certainly as a diversified portfolio, having those different buckets, alternatives, a great way to put it in there. But I agree with clients do get a little bit skeptical about that. But look, in the listed market, there is plenty of opportunities in there, and that's certainly where the ETF market has accelerated due to the fact that you can get in and get out. It might not be the price you want, but you can actually do it. Some of those private markets are a little bit tougher and less liquid. So the listed market is definitely for me.
Okay, Adam, Charlie, thank you so much. My friends, if you were hoping for validation that crypto deserves a spot in your portfolio, well, you might have just found it in this episode. Bitcoin has gone from a fringe idea to a $1 trillion asset class. Whether you love it or hate it, it's here to stay. But like our advisors said, whether it's digital gold or private credit, watch out for bubble trouble. Analyze everything very carefully. That's it from us. Don't forget to like this video and subscribe to our channel so we can produce more content like this. My name is Vishal Tekshanani. Happy investing.